All right, next up, an example on the shareholder's basis in S-Corp stock. Here's some information that we're going to use to calculate a shareholder's basis in their S-Corp stock. First, we've got the initial purchase, and kind of think like a base formula. This is the beginning balance, the additions to that balance, any subtractions from that balance, and then what is the ending balance. We can use that for financial statement accounts, lots of wonderful stuff. We can use that for this as well. You can use it for your bank account. What's your initial balance in your bank account? What are additions? What are some withdrawals you take from your bank account? And what's your ending balance in your bank account? The shareholder buys 100 shares of the S-Corp stock for $10,000. I would say that's going to be our initial basis, but we'll see all the math being down here. Capital contribution, we've got S-Corp income, S-Corp losses, and then non-dividend distribution. Now, these normally would be netted together, but just for the purposes of illustration, so you are seeing how it all works out, we are just including these as separate items. But let's say 1 year they have income, the next year they have losses. That's how it would be. But within 1 year, these would be netted together. But again, this is just to display for you how these both work. And then we've got a distribution. So we'll reference these as we run through. The initial basis is going to be that $10,000. It's what you put into your investment. Nice and easy, $10,000. Then this person contributes an additional $5,000 in cash during the year. As such, simple math, add that $5,000 to your initial stock purchase, which is $15,000. Then we've got an increase for income. So what's your basis? Again, just like what's your basis in a physical asset, whether we capitalize expenses or depreciate it, right? What's your basis? Same concept here. What's the basis? And that's important because when we eventually sell the asset, which is your investment in this S-Corp, that's going to help us calculate our gain or loss overall. We're going to see that we have $7,000 of income. Now, this is the shareholder's allocable share. Make sure you're keeping in mind, is it giving the S-Corp's total share or is it the individual shareholder's share? This is going to now be $22,000, adding that $7,000 to the 15. We're going to decrease it for any losses and deductions. What we see here that it's just $4,000. So we're going to decrease that $22,000 to $18,000 by that $4,000. And then lastly, we've got a distribution, which is kind of the antithesis to a contribution. They are taking out $2,000. So the final basis will be 16, taking that 18,000, subtracting 2,000. Thus, the shareholder's basis in the S-Corp stock is $16,000. Nice, awesome foundational example. Make sure you understand how this is all working. This is going to be incredibly helpful for the exam. Obviously, questions will build on this more and more. We'll see more complexity, but you can do it. All right, we've got another example here, and we got a few changes to what we saw in our previous one. Yeah, we got purchase of stock, and we'll have an initial basis, but then we're contributing equipment. Okay, so what are we using? Are we using the fair market value or the adjusted basis? If you contribute cash, well, cash is cash. That's actually a trick you see a lot of times in sims and multiple choice questions. What is the impact on distributions, especially liquidating distributions from S-Corps and partnerships? Well, cash has the same fair market value as it does basis, right? It's just cash. It's not going to have a different fair market value as adjusted basis. So that's something to keep in mind. And then everything else seems pretty much the same, except now we've got tax-exempt income and taxable income. We're just adding new tricks in here, just like we are the devilish exam providers. We here are trying to give you, all right, change one thing, add new tricks in. How does that affect everything? So it looks like the differences here are instead of contributing cash, we contributed equipment. We have to decide, are we using the fair market value or the adjusted basis? And then we are also talking about the taxable income versus the tax-exempt income. What is the impact on the basis? Now, there will be obviously different impacts on the taxable income, but will that mean an impact on the basis? We will find out. We will see. Here, again, same format as the prior example. We're going to have the initial basis, which is just you bought the shares for $20,000. Cool. You've got $20,000. Now here, we're never going to use the fair market value, especially when it comes to these flow-through entities. 9 times out of 10, we're going to use the adjusted basis. Just keep that in mind. 9 times out of 10, the fair market value will be a distractor. We are using the adjusted basis to the shareholder. And one thing I'll say, and I'll say it a million times as we go through, everything gets taxed. Think about where it gets taxed. It's going to get taxed once unless we are a C corporation. For a C corporation, obviously, there's double taxation. But everything gets taxed once. So that's why we're using the adjusted basis. That's going to translate. So you're essentially giving up your adjusted basis in the equipment for the adjusted basis now in the partnership. If you use the fair market value and it went up, you'd essentially be avoiding tax and you'd have zero tax on that extra $4,000 of gain you had because you're now skipping paying tax on that $4,000. Now you could say, hey, Nick, well, why don't you just pay $4,000 tax on the $4,000 of gain that you contributed the fair market value to? And to which I'd say that's just not the rules. That's not the way it's structured. And it's also a little unfair from the IRS's perspective to kind of hit you with a big tax bill when you're just setting up a new entity. It would be a little anti-business there. And, our wonderful United States of America, very pro-business, wanting to get business moving. But here we are adding the adjusted basis of the contributed capital, the contributed equipment of $6,000. We now have $26,000 of basis. Then we're going to increase it by the taxable income. We're also going to increase our basis by the tax-exempt income. Now, even though the taxability of income is quite different than its impact on basis. We just repeat that again. So you may receive tax-exempt income and you won't pay tax on it. However, that still will increase your basis. So just keep that in mind. The taxability of something is different than its impact on the basis. That's something important to see time and time again. Then we've got loss, just like in the prior one. Nothing too different here now that we've gotten through those points. We're going to subtract the $8,000 loss. And then we've got a distribution, which is the $5,000. We're going to subtract that from our 33, getting us 28. So the shareholder basis for tax purposes is $28,000. Gotta love these examples. We are explaining for you what happens. Add a few extra tricks up our sleeves, and you can tackle them. You'll be able to handle them. Just practice. If you think you've done enough, do a little bit more. If you think you've done enough after that, do a little bit more. You can do it. It's a lot of work. You knew what you signed up for.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.